Uranium just hit $100 a pound for the first time in 2 years. Governments just pledged to triple nuclear capacity by 2050. And every AI data center being built right now needs one thing that solar and wind can't provide: baseload power that never stops. The uranium supply deficit is accelerating, and almost nobody in the retail market is positioned for it. 3 mega trends just collided on uranium at the same time. First, AI. Every hyperscaler, Meta, Amazon, Google, Microsoft, is building data centers that consume obscene amounts of electricity 24 hours a day, 7 days a week. Solar goes dark at night. Wind is intermittent. Nuclear is the only carbon-free energy source that runs at full capacity around the clock. Meta just signed a deal with Oklo for 1.2 gigawatts of nuclear power. Microsoft partnered with Constellation Energy to restart 3 Mile Island. Tech companies aren't just talking about nuclear anymore. They're signing contracts. Second, governments. The March 2026 Nuclear Energy Summit in France produced the most significant commitment to nuclear in decades: a formal declaration to triple global nuclear capacity by 2050. The US plans to quadruple its own nuclear capacity, with 10 new large reactors under construction by 2030. The Department of Energy committed $2.7 billion to rebuild domestic uranium enrichment. Uranium was designated a critical mineral for national security, alongside rare earths and lithium. Third, geopolitics. Russian sanctions are cutting off a major fuel supply chain that Western utilities depended on for decades. New restrictions on Russian uranium imports begin in 2028. The scramble to secure Western supply is already underway. Here's the structural issue. Uranium mines take 10 to 15 years to develop. You can't just flip a switch. Global production currently meets about 90% of demand. The remaining 10% comes from stockpiles that are shrinking. By 2040, the World Nuclear Association projects uranium demand could more than double from 69,000 metric tons to over 150,000. Even the low-growth scenario shows demand exceeding 100,000 tons. Meanwhile, the largest producer, Kazakhstan's Kazatomprom, signaled a reduction in its 2026 output targets. Canada's MacArthur River mine lowered production due to development delays. U.S. output dropped 44%, and financial buyers like Sprott's Physical Uranium Fund are pulling supply off the spot market, amplifying the squeeze. The market is projected to reach $60.5 billion by 2030. The deficit is not theoretical. It's structural and accelerating. Now the risks. Uranium pulled back from 101 to about 86 in March, after Uzbekistan unexpectedly boosted production above forecasts. Short-term supply surprises can crater prices temporarily. Nuclear projects are notorious for delays, cost overruns, and political opposition. Small modular reactors sound great on paper, but none are commercially deployed at scale yet. If the nuclear build-out disappoints, uranium demand projections fall apart, and uranium is illiquid. It doesn't trade like oil or gold. Thin markets mean wild swings in both directions. This is not a commodity for passive investors. So what's the chaos capital take? Uranium is the forgotten commodity in the AI trade. Everyone talks about chips. Everyone talks about data centers. Almost nobody talks about what powers them. Nuclear is the answer, and uranium is the fuel. The supply deficit is structural. The demand is coming from AI, defense, and the energy transition simultaneously, and governments are backing it with real money, not just press releases. For exposure, KMO is the largest Western uranium producer. Sprott's URNM ETF gives you a basket of miners. Sprott's Physical Uranium Trust gives you direct commodity exposure. And NextGen Energy is the highest grade development project in the pipeline. This is a multi-year thesis, not a trade. The reactors being built today will consume uranium for 60 years. That's the timeline. AI needs power. Power needs nuclear. Nuclear needs uranium. And the world doesn't have enough. That supply chain is the most important one nobody is talking about. The capital markets are chaos. Embrace it, and I'll see you in the next video.